Good morning and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Wednesday, March 25th, 2026, and we have a lot to cover today, Lizzie. What are the main themes you're seeing in today's news?
Thanks, Robert. Well, the big story dominating markets right now is the ongoing geopolitical tension in the Middle East, particularly around Iran. We're seeing oil prices whipsawing on news that the US has drafted a 15-point ceasefire plan, which initially sent crude tumbling below $100 a barrel after being well above that level. This is creating significant volatility across energy markets and related sectors. What's interesting is how this is rippling through to inflation expectations. The ECB's Lagarde has actually opened the door to potential rate hikes if this conflict pushes inflation higher, which is a notable shift in rhetoric. We're also seeing import prices in the US jump by the most since 2022, which happened before the war escalated, so there's real concern about supply chain disruptions and cost pressures building. On the corporate side, there's significant activity in the tech sector. Nvidia and SLB announced an expanded partnership, which Bernstein is calling part of a 1970s-style supercycle for Middle East oil services. Meta is bringing back Hugo Barra 5 years after he left, specifically to focus on AI development, which really underscores Zuckerberg's urgency around artificial intelligence. Then we've got some mixed economic signals. Mortgage demand dropped more than 10% as rates hit the highest level since October, and recession odds are climbing on Wall Street, as analysts see cracks forming beneath the surface of the economy. But at the same time, China's chip industry is showing continued strength, so it's a very fragmented picture.
That's quite a complex landscape. With all these cross-currents, what does this mean for traders and investors right now?
The key word here is selectivity. We're in an environment where broad market bets are getting much riskier. For energy traders, the volatility around oil is creating both opportunities and significant risk. If you're positioned in energy stocks, you need to be very tactical about your entry and exit points, because headlines are moving prices by several percentage points in a single session. On the inflation front, if Lagarde's comments are any indication, we could see central banks becoming less dovish than markets have been pricing in, which would be negative for rate-sensitive sectors like real estate and utilities. The tech sector remains interesting despite the broader volatility. The AI theme continues to attract capital, as we're seeing with Meta's moves and the Nvidia partnership. However, there's a theory circulating that the software stock sell-off could get even worse, so investors need to be discerning about valuations. One area I'm watching closely is the divergence between growth and value. In uncertain times like these, quality names with strong balance sheets and consistent cash flow tend to outperform. The mortgage demand drop is particularly concerning because it signals that higher rates are really starting to bite into consumer activity, which could slow economic growth in the second quarter. For portfolio positioning, I'd suggest maintaining some defensive exposure, perhaps in consumer staples or healthcare, while keeping powder dry for opportunities that emerge from this volatility. The market is trying to price in multiple scenarios simultaneously, which creates inefficiencies that active traders can exploit.
That selectivity is going to be key in this environment. Steve, let's get into the economic numbers. What's the picture looking like on the data front?
Thanks, Robert. Today is actually a relatively quiet day on the economic calendar with no major indicators scheduled for release, which gives us a chance to catch our breath after some significant data earlier this week. But looking ahead, we have several important releases coming that traders need to be aware of. Tomorrow, Thursday, March 26th, we get initial jobless claims, which is a medium volatility indicator that gives us a real-time pulse on the labor market. This employment metric has been closely watched as analysts try to determine if we're seeing any softening in hiring conditions. Then on Friday, March 27th, we have two consumer sentiment indicators releasing on the same day. First is the Consumer Confidence Index, which is forecast to come in at 54, down from the previous reading of 56.6. That would represent a continued decline in how consumers feel about economic conditions, which aligns with what we're seeing in mortgage demand and other consumer-facing data. Also on Friday, we get the University of Michigan Consumer Sentiment final reading for March. The preliminary reading on March 13th came in at 55.5, which actually beat the forecast of 55 and was down from 56.6. The forecast for this Friday's final reading is also 54, matching the consumer confidence forecast. These sentiment indicators are particularly important right now because consumer spending drives about 70% of U.S. economic activity, and if households are feeling less confident, that typically translates into more cautious spending behavior. Both of these are medium volatility events, but in the current environment where markets are trying to assess recession risks, any significant deviation from forecasts could trigger outsized market reactions. The fact that we're seeing consistent declines in these confidence measures over the past few months is something that supports the growing recession concerns we're hearing from Wall Street analysts.
Those sentiment numbers will be critical. Lizzie, let's shift to crypto. What are you seeing in digital asset markets?
Crypto markets are showing some really interesting dynamics right now. Robert Bitcoin has demonstrated notable resilience during this period of geopolitical tension. After dipping to around $69,500 on Iran-related nerves, BTC has bounced back and is now trading above $71,000. What's particularly significant is that Bitcoin held the 50-day trend line, which is a key technical support level, and has now reclaimed that 71K level. The big question for Bitcoin traders is whether we can break through $72,000, which is emerging as the key resistance level. There's a massive $14 billion Bitcoin options expiry coming up this Friday, and analysts are pointing to $75,000 as a potential price magnet. What I find encouraging is the exchange outflow data, which shows genuine accumulation by investors rather than speculative trading. We're also seeing Bitcoin holders shift from panic selling to more disciplined cash buffer management as volatility deepens. However, Bitcoin's role as a safe haven asset remains unproven. While it's shown strength, it's still getting jolted by geopolitical headlines, though notably less dramatically than in previous crises. There's also been some selling pressure from sovereign entities, with Bhutan offloading another $37 million in Bitcoin from its state wallet. Moving to Ethereum, we're seeing bullish developments on multiple fronts. ETH rallied to the $2,200 level before pausing, and there's growing institutional interest in staked Ethereum. Lombard just partnered with Bitwise to offer Ethereum yield and lending to institutional custody clients. And we're seeing cautious traditional finance firms increasingly comfortable with staked Ether products. Ethereum developers are also ramping up security efforts with a new post-quantum team, which shows the network is thinking long-term about threats. The big question for ETH traders is what will trigger a breakout above $2,400. We're seeing bullish metrics emerge, but the market needs a catalyst. For Solana, the momentum remains positive. The Solana Foundation just debuted a new developer platform in partnership with MasterCard and Western Union, which is a significant step toward mainstream financial integration. We're also seeing infrastructure improvements like BitGet Wallet integrating Solana's stablecoin payment infrastructure. Solana continues to benefit from its speed and low transaction costs, making it attractive for payments and DeFi applications. Overall sentiment across these three major cryptocurrencies is cautiously bullish. Bitcoin is testing key resistance levels with strong accumulation patterns, Ethereum is building institutional credibility with staking products and security enhancements, and Solana is expanding its real-world utility through major partnerships. The key risk factors to watch are continued geopolitical instability, any unexpected hawkish signals from central banks, and the Bitcoin options expiry on Friday, which could create short-term volatility. But the underlying fundamentals, particularly around institutional adoption and network development, remain constructive for the medium term.
Thanks, Lizzie and Steve, for those insights as we navigate these volatile markets with geopolitical tensions, mixed economic signals, and evolving crypto dynamics. Staying informed and disciplined is more important than ever. Remember, do your own research and consult with financial advisors before making investment decisions. If you found today's discussion valuable, please subscribe to The Morning Bell so you don't miss our daily market analysis. I'm Robert, and we'll see you tomorrow.